Hello, this is Michael, stock analyst with Long Wealth Capital. Today is Sunday, September 7th, 2025. The SPY closed on Friday at 647.24. Crude oil futures closed at 61.87 on Friday, and they are currently already trading around 62.60. Today we're looking at Exxon Mobil Corporation, ticker symbol XOM. It closed on Friday at 109.23. Since 2023, ExxonMobil has traded in a range between 95.8 and 126.5. During that period over the last few years, it has only dropped to 100 and below 4 times, as you can see here highlighted on the chart. So it's not a common event, and it may or may not get down that low here in the next few weeks. We will have to see. Oil has been trending down since June 2022. From a peak of about 120, it's been as low as 55.3. As you can see here, recently this year, it's been trading between 78.6 to 55.15. And in general, it's found support here around 61 or so in the recent months. As you can see, and with most major oil and gas producers, they tend to trend along with the price of crude oil future prices. As you can see here in blue, the crude oil prices are in blue, and this is on top of the ExxonMobil chart. So you can see in general it tends to trend up or down for the most part with crude oil future prices. And of course, other changes in the indexes also have an impact as well. So looking at this year in 2025 for ExxonMobil, I'm being a little more conservative by going back all the way to the peaks here at 120, and also including the April tariff news that brought it down to 97.9. That was the last time that it dipped below 100. And so using that little bit longer range Fibonacci retracement, the golden retracement here at 0.618 is around 106.2. The 78.6 retracement is here about 102.5. So here in the last few days, ExxonMobil, along with most other major oil and gas companies, has been trending down and actually traded below both the 50 and the 200-day moving average. That's here about 110.2. So on Friday, it closed at 109.23. You can see here at this golden retracement area, here around 106. Last time it was in this area, that was the area of support, and it came up. And back here also around that same area, it built up after that. I am actually being a little bit more conservative, and I've got a more cautious dollar cost averaging recommendation. But I'm actually recommending to start an initial position with a smaller percentage amount, starting at 104.6. And I'm recommending 5 different levels total. The next level is 103.5, 102.65, 100.3, and then down to 96.75. And I'll show you here in a little bit why I think it might get down to those levels. One thing to note, that at these levels, as it drops from these levels, it will increase above a 30% undervalued intrinsic value level, which is starting to get attractive. As far as hedge funds, a couple of notorious hedge funds to note. ExxonMobil doesn't have a huge percentage of hedge funds as far as large percentages in their portfolio, but even without that, Ken Fisher has recently slightly increased his position, but he is currently invested at $3.3 billion, which is a huge amount. And Ray Dalio recently had a significant increase in his position, over $104 million. So some of the reasons why I expect that ExxonMobil price might be dropping is today OPEC Plus announced that they will increase oil production by another 137,000 barrels per day from October onwards. Each month or each couple months they've been increasing their production. I read that they stated that several of these OPEC Plus members are already near capacity, and so that may be part of the reason why they reduced their total increase this time. So October moving forward, it's only increased to 137,000 barrels. Previous months, it's actually increased higher than that. The next couple of weeks are traditionally a seasonal period of weakness in the indexes, And this week, the indexes could experience additional volatility, not just because of the events on Friday, but also this week, there are more inflation data reports that are coming out that could provide a potential drop in the indexes and most stocks. So of note, also specifically for ExxonMobil on Wednesday, shareholders that held shares back in August 15th, those shareholders on Wednesday, September 10th, will be getting a 99-cent dividend. So that typically causes the stock price to drop by roughly about the same amount of the dividend. So that could produce about $1 drop in the stock price. Coming up in the near future, at the end of October, the next earnings report comes out for ExxonMobil before the market opens on Thursday, October 30th. So that's about 6 or 7 weeks out. So that could be a potential increase or decrease in the stock depending on what their earnings are. Also, if we are in a position and we're waiting on it to build back up to the 50-day moving average, unofficially their next ex-dividend date is expected on November 14th, 2025, again for 99 cents. So this is my recommendation, just as managing risk. I'm recommending that we use 5 different levels for dollar cost averaging in. So this is just an example. I don't recommend just to manage, position sizing as part of managing risk. So for this individual stock, I don't recommend putting in more total than 4% of your total investment portfolio. Just using this as an example, if you had an investment portfolio of $250,000, 4% of that would be $10,000 total. So again, you have to adjust this to manage your risk based on your position size total. But just by using this $10,000 example, I would recommend only putting in about 10% of that at 104.6, 15% of that at 103.5, 20% at 102.65, 25% at 100.3, and 30% if it drops down to 96.75. Now again, if all that happens, that would actually give you an average dollar cost average of a little bit under 100.5. So again, once we're in that position, our exit strategy would be looking here at this 50-day moving average. Currently, the 50-day moving average is at 110.2. So around 110 would be my exit point. Again, if the stock price drops, we'll be monitoring that as the 50-day moving average would follow with it, right? So we want to exit when we get back up to the 50-day moving average. Currently, that's about 110. It may be a little bit lower moving forward depending on the price action. Thank you very much. This is Michael.